Good evening, everyone. I hope you all are having an amazing weekend. The topic of discussion this week is key strategies for selecting stocks for day trading, the common mistakes to avoid, and insider tips from me and from Sniper Trades with a few use cases that we have had from last week. So when I started Sniper Trades, mostly my vision was to empower traders with comprehensive education and tools, aiming to enhance trading skills and decision making for sustained and consistent success in the stock market. With that in focus, I am trying my best to come up with as many education topics and use some recaps from our previous weeks to add to the use cases of what I'm trying to teach in real time during trading hours and how to follow along with the market. Definitely comment below if you are looking for something to learn from me. I will be happy to go over that in the near future sessions. First, let me start off with explaining to you what day trading is and how high the stakes are. Day trading basically involves buying and selling options or leverages or stocks within the same trading day, making it a very high stake endeavor due to the potential for rapid gains and losses. Stock selection is critical because the right choices can lead to significant profits through leverages and short term price movements. However, this is basically a double edged sword, too, right? So, the wrong selection can result in substantial losses, because of the huge volatility and also obviously because of the leverage that you're going off with basically options. The inherent volatility and liquidity of chosen stocks directly impacts the trader's ability to enter and exit positions quickly and at favorable prices, right? So, informed and strategic stock selections is paramount to navigating the fast paced, high risk environment of day trading successfully. Obviously, with this high risk endeavor, you also need some very successful risk management strategy nailed down. In day trading specifically, risk management is the linchpin of sustainability and success, involving strategies to minimize losses and protect capital. It encompasses setting strict stop loss orders, limiting the percentage of capital risked on a single trade, and diversifying the trades if you are basically trading some certain stocks. Effectively, risk management also involves adhering to a well tested trading plan, recognizing the psychological aspects of trading to prevent emotional decision making and continuously monitoring market conditions for the potential impact on the positions as well. By implementing these disciplined practices, day traders can navigate the inherent volatility of the market, and in the long run they can definitely be successful. With that, I would want to give you 4 points as to what are the do's for picking up a day trading a stock for day trading, and four don'ts for not losing in the stock market. The first and foremost I'll tell you to do is definitely do some technical analysis. Technical analysis is mostly like reading charts where you are basically looking for the sharks in the market trying to creating a pattern before they prey, right? So they are basically creating a falling wedge, a bull flag, consolidation, or a head and shoulders pattern, or a inverse head and shoulders pattern, and blah blah blah. There's so many other setups that you can talk about when we talk about chart patterns, right? So this is where you want to see certain setups, and that is where I kind of try to provide you as much as I can with respect to using trend lines and coming up with falling wedges, rising wedges. You'll have bull flag consolidation, bear flag consolidations, head and shoulders, inverted head and shoulders, certain reversal patterns, some are continuation patterns, etc., etc., and etc., right? So there is definitely the need to do your technical analysis on the stock to understand what a particular stock is doing. My first and foremost thing that I always do every week is technical analysis, where I narrow my focus list of stocks also to probably about 5 to 7, and and go from there, right? Most of the time, I'm always looking for trend line breaks, peekaboo setups of downtrends or uptrends, and that is where you technically have a lot of profit potential as well. So that is the first thing that I always do. The second one is understanding the news and the market sentiment. You want to understand how a particular news is going to affect the particular stock and the market as a whole, right? So if, for example, tomorrow macro data comes out with PCE being extremely hard, right, and then which is not good for the market. No matter how the market kind of looks, the chart pattern will get invalidated right off the bat, right? So that is where you should always be cognizant of the fact that, okay, you know what, the chart pattern is there, but is there a news risk? Is there a market sentiment shift that can happen because of the news? So you want to understand that, right? Then you want to look for the high liquidity and volatility. So when there is a volatility, you also want to be in options trades which have high liquidity as well. You don't want to be in a stock which does not trade much. Like for example, there are multiple contracts on BKNG, on CMG. There are, LRCX, for example, the one that we kind of trade also. There are certain strikes which absolutely don't have any volume at all. You don't want to be the only person in that trade where you cannot have an exit strategy at all. Even though there is volatility, there won't be any liquidity for you to get rid of those contracts at a particular fair price that you think is right. So you want to be in you want to look for flow at that point, right? That is where I generally take flow as a confirmation for my chart, and from there go and position myself in that particular options flow, so that like when I want to get out, I can always get out, because I know there is a lot of interest that traders are showing at that particular strike, at that particular expiry date. So that is where I kind of use flow for my confirmation bias. The fourth and most important thing, having a strong risk management strategy. When I don't see a breakout, but then this is a breakout that I have seen in the past, and I want to hold on to that particular position. What I generally do is I tend to position small into a particular stock, or that I tend to buy a lot of stock, or position very small onto that options trade, waiting for that breakout, so that like when I'm positioned small, even though there is no confirmation, I can stay in that position, stay put, and say, okay, you know what, I will wait for this particular stock to break out, because I'm also positioned small. I can always wait for it to break out, give me a confirmation, and then probably size up on that particular trade. So that is essentially how I kind of do my risk management strategy as well. So let's also talk about four don't want to do. The first one is chasing the hype without analysis. I've seen multiple people doing this quite a bit, where they do like they just chase whatever people are posting on social media. They don't really know what's happening on the stock. They just see someone's gain and just FOMO on it, and think they can also do the same thing, which very rarely works. Unfortunately, even if it works the first two times, the third time you might lose everything as well. So just understand that you don't want to chase the hype. You want to be you don't have to be at the very start of the hype or the very end of the hype. You want to catch the middle portion of the move. That is where you will be more successful in this trading environment of day trading. The next one is ignoring the overall market strength, right? Or the overall market trend, for example. So if the market is going down and a particular stock is going up, you don't want to be playing against the trend of the market. You want to be with the market. So you want to look for stocks that are weak, right? So when the market is going up, you don't want to look for stocks that are going down, right? You want to be riding the wave up. So you want to stay with the trend. So always, never ignore the market trend, right? That is should not do. Number two. Number three is over trading. Less is always more. I will say this a million times, and I will always be right. The less is always more. I have not I never overtrade at all. Like I'll probably trade about 7 to 10 trades a week, and that also I feel it's quite a bit. So don't ever overtrade. That is one of the biggest flaws that I see with many traders out there. The main reason why 95% of the traders do not make it in the market is because of overtrading. The last but not the least is never ever neglect your trading plan. For example, when you think about there is a particular stock that you want to trade for a dollar, sorry, an option that you want to trade for a dollar, just wait till it comes to a dollar. If it goes, it goes. Let's search for a next opportunity. It was not your trading plan to play it at a 50% price hike, so you don't want to trade it, right? So understand that. Just understand that you have to wait for your opportunity to strike. You have a trading plan. Not respecting your trading plan is basically not trusting or not respecting yourself. So these are my 4 do's and 4 don't do's for your day trading and how to pick certain stocks when you're day trading, right? So with that, I will also talk about certain use cases from last week as to how we kind of caught certain moves and things like that, and how did we position ourselves with doing it, right? So without further ado, let me start getting into my Discord here, where all right, let me start getting into my Discord here, right? Like I want to look for trade like let's talk about AMD first, right? Like what did we talk about AMD last week? We talked about AMD where AMD again inside day on Friday, a nice little compression, and my experience, AMD with an inside day usually breaks to the upside. Or what it usually does is it fakes you out with a little downside move towards 174. Probably towards 174 to 170, and then will bounce back later in the week. So keep an eye out for that on AMD, right? Like this is where you want to be aware of what's happening in the market. This was 22nd. So 23rd, 26th. So when on Monday it dipped towards 174. That is essentially what we were trying to target, right? So that is when we kind of got into AMD, right? So but then why did I? So if you see, this was where we got into AMD, right? So obviously I did get into LRCX as well. This is something that I'll talk about with respect to the a strategy of diversifying and things like that. Also, this is where we got into AMD on Monday, and we were like into the 180 calls at $2.40, right? So after we got into that position, you see that I did not go too big. I went in a little bit smaller onto my position, and knowing that there would be a breakout that would happen after this particular dip, right? So when we had the dip right here, this was where we kind of went in, and then obviously it took three days or so, created those hammer candles, and after that we did see this huge surge in AMD, right? So where these 180 calls went to, they went to $23. That is the power of options, right? But then obviously I did not go after LRCX and AMD both together, because like both run together too, right? Like with LRCX with $7.20, I was only able to get about 3 contracts, but then with AMD I was able to get 10 contracts. So it was much easier for my scale out strategy as well. So that is the reason why I went after AMD rather than going after LRCX. But if you see, both of them kind of hit our price targets, and both of them were pretty big trades, right? Like LRCX, we talked about, well, let's see, when we bought LRCX, we thought about 980 to 1000 this week, which was absolutely right? Like, let's go into the chart. If you want to check it out, like LRCX did go to 980, I guess, right? Like at least close to 980. Yeah, there you go. 981. That's where we closed. So see that, right? Like this was again, when we talked about this was on 226, right? Like which was on Monday. But then, like, I sold LRCX, which was pretty good profit, and then I got into yeah, and after that I got into AMD, because both of them kind of move together. Your risk management comes in. You don't want to be over leveraged on chips, because LRCX and AMD both belong to that same sector. One moves, the other moves as well. So you want to be like, you want to understand what's happening, and that's where we got into AMD, and these absolutely ran, right? So, like, but then, like, why did not go big on this position when I was so confident? Obviously because, like, if you look at AMD, it did not break out when I got in. This was where it kind of broke out, and then it kind of ran next day as well. So that is essentially what you're looking for, right? Like, this is a breakout. This is something that you can obviously play on a short term basis, and probably get the bigger move. But, like, or you can size down, like, from here to here you would probably get about, 200, 300%. But from here to here you got about 1,000%, right? And that's the difference that you can make. And like, if you're sizing down and you are willing to wait and you're confident about the setups, this is something that you can always do, right? So next one, I want to talk about CRM, right? Like, CRM. So when CRM opened on Thursday, right? Like, this was when was that? Yeah, this was Thursday after their earnings. We were talking about how their earnings was pretty great, and how it would be a dip and rip situation. And then when it opened, it basically opened at $2.50. When I expected that 305 call would be opening at 1. I never got in. I was waiting. That was what I was saying. Premium still so high that I don't want to get in, right? So, and that's where people waited until 1 and got in, and they did pretty good. I mean, these contracts closed at from $1, they closed up to $21 on Friday. So that's your 20x. So once you stick to your trading plan, once you understand your trading plan, once you are like, okay, respecting yourself, and not deviating from your trading plan, there is absolute no reason to chase. You can make very, very good money in the stock market as long as you stick with your goals, right? So that's mostly about how you want to, like, stick to your trading strategy and trading plan, right? So that's about next one. I want to talk about Meta, right? Like, this was Meta, where we were like, talking about how, let's see, yeah, this was Meta, where we were talking about, how this was going to be a risky trade, and how we were going to position ourselves there, where I was talking about how Meta I was is a nice little flag, and how high confident I was Meta going into Friday, and how my position was 3K, whereas MU was just 1K, right? I was in both positions, where in Meta in Meta I was Meta I was in the 500 calls at 0.36, basically went to 3.6. MU I was in the 65 cents 90 call. These probably went to about $6 plus. So both of them almost 10x trades, right? Like, but then, I did not size up or anything. If you I was taking three, like, 3k 3k 1k bets. But then when I sold Meta, it was 3x, basically got my 10k, which generally aligns with my weekly average weekly gains as well, right? So just one trade gave me everything that I needed. So, and I did not even size up. I was basically in my bounds, where I was okay. I made money on AMD. I'm okay to put some money into Meta or and MU. Obviously, I sold MU and put 1k more into Meta, made a little bit more, but then on Meta, but people got into MU 71 calls as well, which was basically what happened was, I sold MU90 call was in the money, so I kind of sold it, and I was trying to get into the 91 call, and given the thing with options, right? Like I said that, and then people started running into it and inflated the premiums on 91 calls, and I couldn't get into it. So I just put that $1,000 that I had in MU. Basically, I made about 25% on my 90 call, and then that I put into meta, and that's where we kind of caught that move for the three for about, I sold it at about 4x, 3x or 4x. But I know quite a few that have caught that move to 10x as well. So all you need is that one single trade that will help you to make really good in the market, and that's where you will be very successful as well. So just understand that, and if you like these kind of videos, like these recaps, and how our trading mentality is, and what to do, what not to do in particular in the stock market while you're day trading to become successful, I'm all on. I would love to go over as many topics as possible for more people to be successful in the market. And if you do like this video, definitely do like, comment, and subscribe to my channel, and it'll really help boost my morale as well, and help as many people as possible. Thanks a lot. Have a good weekend.